Hello guys, and welcome back to my channel. Today we're going to be talking about the basic patterns of candlesticks. So for example, if a candlestick moves a certain way or there's a certain pattern, that's how you know which way the chart is going to go and which way the movement is going to go. So let's get right into the video. Let's head over to our screen and take a quick look at a picture I have pulled up. So this picture we have here is basically a picture that demonstrates regular candlestick patterns. So there's many different kinds of patterns and we're going to go over them one by one. So let's start with reversal patterns. That means that if a market is going certain ways, if this pattern occurs, that means it's going to start going the other way. So basically the name speaks for itself, a reversal basically. So for example, if we look at a double top right here, the first pattern we have. So for example, if we have a line coming up or a trend coming up, if it's going up and it comes a little bit down and it touches this resistance line, which is called the neckline, and it comes back up and also rebounds from the same line it did before, that means it's gonna go right back down. So basically this is a reversal. That means it was originally going up and it went back down, it hit this resistance line, then it went back up and it rebounded from the same spot or almost near the same spot, and then it came back down. So that means this is a reversal, and this reversal is called a double top reversal. So let's head over to our second reversal pattern. This is called a head and shoulders. Now obviously this has the same first movement. So basically it was coming back at first, it came a little bit back down, it hit this neckline over here, as you can see it's labeled, and it went back up a little bit higher than what it did before, and then it came back down to the same neckline, and then it went back up again and it hit the other resistance line. That indicates that it's gonna have a reversal. So basically it comes up, goes down to the neckline, goes higher than it did before, comes back down to the neckline, and then doesn't go as high as it did in the previous one. That means this is a reversal pattern and the market is going to start going the other way. So the next pattern we have here is called a rising edge. So this means, as you can see, these trends, I'm going to zoom in a little bit here. I don't know if that's going to be good quality, but okay. So let's start here. So the line originally starts from going up, and as you can see, it makes this trend right here. It's almost like a zigzag pattern, but it keeps getting smaller and it's on a rising slope. As you can see, none of these slopes are straight. As you can see, this is going up and this is going up. It's called a rising wedge. And as you can see, once it keeps decreasing and it keeps doing the zigzag pattern, as it gets closer to the end, it starts going down. That means it'll eventually break this entry, and this is the target that it'll have. So that means this is how much it's going to go down, potentially predicted. So basically it starts from up, does a rising zigzag pattern, and then goes back down. This is a reversal. Now let's talk about reversal the other way. So that means it was originally coming down, then it went back up a little bit, hit this neckline, came back down to almost the same spot, and then it continues going up. That means this is a double bottom reversal. As you can see, this looks like a W, so this is also how you can tell it's going to be a reversal. Now let's go on to the second one, which is called an inverse head and shoulders. So basically the same thing we did on the top, but it's just reversed. So it was coming down at first, went back up a little bit, came down even more, went back up to the same spot, and then went down to the almost the same spot as the first one, and then it gets reversed, so it starts going the other way. And then on this side we have the falling wedge, similar to the rising wedge but basically inverted. So it was coming down originally, does the zigzag pattern, but as you can see it's going downwards now. As you can see, this is slanted, right? So it starts going down and then it hits this point. As it gets closer, it reverses. So originally coming down and then rising up after this pattern. So these are all the reversal patterns. That means it goes in the opposite direction of what the market was going at first. So now let's look at continuation patterns. That means where the market starts, it does this little pattern and it keeps going the way it did. So let's go to the first continuation pattern. as you can see, the first continuation pattern is called a falling wedge. So the original position is that it's coming up, it does a zigzag pattern downwards, and then since it's coming up at first, it does a downward zigzag pattern and then continues going back up. This is a falling wedge continuation. And let's look at the bullish rectangle next, which is basically that a line is going up at first and then it does a zigzag pattern, but as you can see, this doesn't have a slope to it or barely any, so it goes in a straight line. That means it's gonna continue going the way it did. So initially it was going up, it did this pattern, and it's gonna continue going up. So next, let's look at the bullish pennant. So this is basically a line is coming up, it does a zigzag pattern, but as you can see, this time this is symmetrical. So basically the amount that is goes up, it's the same amount that comes down. So as you can see, this part it's slanted, but this one is symmetrical and it's decreasing. Unlike this one, this is symmetrical also, but it's going in a straight line. This one is symmetrical, but it's decreasing, and after this happens, it continues going up. So now let's take a look at the rising wedge. So this is basically a line is coming down at first, it starts doing a zigzag pattern, but as you can see, this is going upwards and it's declining a little bit in area. So, and then it keeps going the way it did. So originally it was coming back down, it did this pattern, it's decreasing and it's doing a zigzag pattern, and then it continues going down. So now let's look at the bearish triangle. This is basically the same thing as a bullish triangle but inverted. So this time it's coming down, does this zigzag pattern but in a straight line, and then continues going downwards. So next, let's look at the bearish pennant, which is basically a line starts going down, does a zigzag pattern symmetrical decreasing, and then continues going down. So all of these are continuation patterns. That means whatever way the market was originally going is going to do these patterns, any of these patterns, and it's going to continue going the way it did. So for example, if it's going up, it does one of these patterns, it's going to continue going up, and also vice versa, where it's going down, does this pattern, and then it's going to continue going down. So now let's look at bilateral patterns. What this means that it's undecided where the market will go, so it can go both ways, so you have to be very careful while trading this. So the first bilateral pattern is called an ascending triangle. So let's take a look. The line is originally increasing, does a zigzag pattern, but as you can see, this first line, this top line, is a straight line. So it's touching this resistance point every time it does a zigzag pattern, and this line is slanted. That means this line keeps decreasing, but this is in a straight line. So as it gets closer to the end, it is undecided where the market will go. So it is very risky to trade in these patterns. So if it starts going down, this is the target, and if it starts going up, if it breaks out from the top, this is its target. Same thing for a descending triangle. If it's coming down and it does a zigzag pattern, in this case the bottom line is a straight line and the top is slanted. So this is undecided where the market will go, so it can go both ways. If it does a breakout right here, that means it's going to go up, and if it does a breakout right here, that means it's going to go down. And now lastly, let's look at the symmetrical triangle. So the first line starts going up, does a symmetrical zigzag pattern, and it keeps decreasing. And now this way, as you can see, the lines are longer compared to the other triangles. As you can see, this looks similar to the bullish pennant, but in this case the lines are longer, so indicating more movement. So it goes up, it creates a zigzag pattern symmetrically, and as it gets closer to the end, it is undecided where the market will go. So you have to watch out for the breakout. So if it goes to the top a little bit, breaks out to the top, it's going to go to the top. And if it breaks down on the bottom right here, that means it's going to go down. So these are the patterns, basic patterns. These aren't all of them, but it's basically the most common patterns you see while trading. So basically this picture explained the most common trading patterns. So reversal patterns, continuation patterns, and bilateral patterns. That means reversal is going to go the opposite way of what the market was originally going, and continuation, it's going to continue going up, and bilateral, it has not been decided. So you have to watch out for the breakout to happen to decide which way the market is going to go. So that's it for this video, guys. If you like this video, please click the thumbs up button and drop a comment down below of what type of videos I should create and what type of videos you guys want to see, so I'll make videos on that topic. And also consider subscribing to the channel. That's it for this video, guys. See you in the next one.